I'm Sarah, a tutor at Accountancy Learning, and in this video I'm going to be taking you through the Tax Processes for Business AAT Sample Paper 1, Task 1. So this task is going to be about understanding and calculating UK tax law principles relating to VAT, and also the registration and deregistration and special schemes. So our first question then. Identify which one of the following statements about HMRC is correct. So we're asked to identify just one of these statements as being correct. So let's go through them one by one. HMRC is the relevant tax authority for VAT only. So be careful with this one because there's a key word in here, only, because you may read this question quickly and go, HMRC is the relevant tax authority for VAT, which would be correct. But when you add in the only, that's incorrect because HMRC will deal with your national insurance and your income tax, etc. as well. So it's not only for VAT, so it won't be the first option. The second option there is HMRC is responsible for the payment of VAT to all VAT registered businesses. So HMRC doesn't pay VAT. HMRC in fact collects VAT from those VAT registered businesses. So the second one is not going to be true. The third one, HMRC uses VAT guide and supplementary notices to show how they will interpret VAT law. So this one is true. So they publish the notices to provide information and guidance to businesses. It shows businesses how HMRC are going to interpret the VAT law. So this one is going to be our correct answer. But just so that we've checked all of them, looking at number 4, HMRC regulates VAT outside the UK. So this is incorrect as VAT, HMRC are UK based only. So part B, we've now got to match the statements below with the correct type of supply. And the question gives us these options to choose from. So in your exam, you'll be able to click on the drop-down box to choose your answer. So the first one then, these supplies are not chargeable to VAT. So the key element here is not chargeable. So if they're not chargeable, then it means they have to be exempt. So we cannot charge VAT on them at all. The second one, these are taxable supplies, but the amount charged to the customer as a result of adding VAT does not change. So if we're adding VAT to the net amount, but then the total doesn't change, it means the VAT has to be 0. So this is what we would class as 0 rated supply. The third statement that we're given, these supplies include most taxable products and services. So these are going to be standard supplies. So they're going to be standard rated or VAT. And the last one there, VAT charged on this type of supply is greater than nil, but lower than the usual rate. So we're not going to be looking at 0 rated because it's greater than 0. We're not going to be looking at the usual rate, the standard rate. So therefore, it's going to be charged at a reduced rate. And that's part B complete. Part C then, so we are given some extra information here. And it says that TC Footwear Limited started to trade on 1st of January 2023, selling shoes for both adults and children. The adult shoes are classified as standard rated, and children's shoes are classified as 0 rated. Sales for the first 6 months are shown in the table below. So part C then is to identify the month end date that TC Footwear Limited will exceed the VAT registration limit. And we're told that when completing the date, you must enter the year in full. So you need to be entering 2024, for example, if it's in the current year. Also, we're going to be looking for the month end date. So we're looking for the end date of that month, the last day in that month. So for this then, you are going to be able to use your reference material in the exam. So in the exam, you'll see the reference material button on the right-hand side. You can click on that as many times as you like during the exam, and it will bring up the reference material that you've been using whilst you've been learning. So for this then, we are going to want to be looking for reference material 2. So I'll just bring this up on screen so we can have a look at it. So we need to identify when TC Footwear Limited are going to exceed the VAT registration limit. So we need to have a look and go, well, the limit, the registration threshold, is shown in reference materials 2 as £85,000. So what we need to do now is add together the sales, because although the adult shoes are standard rated and the children's shoes are 0 rated, they still need to be added together. You don't just take the adult shoes. So adult shoes in January and children's shoes in January, when we add those together, we have 22,500. So they haven't yet hit that £85,000 threshold. Next, on top of that 22,500, we're going to add on February's adults and children's shoes, which then gives you a new balance of 45,900. Again, we're still not at that £85,000 threshold. In March, we're going to add those adult shoes and children's shoes sales on to the 45,900 to get our new figure of 66,700. Again, we're not at that £85,000 threshold yet. So let's add on April's sales for both adults and children, and our new balance becomes 90,200. So now we can stop there because we've gone over the £85,000 limit for registration. So the month end we're in is April. So the month end date would be the 30th of April. So that's the final day in April. And then you need to type the year in as 2023 in full. So do be careful with that, because it is something that you would lose a mark for. So moving on to the second part of this question, we're then given some statements that we need to identify whether they are true or false. So the first one, TC Footwear Limited will exceed the VAT registration threshold using the future test method. Or we're not using the future test method because actually we're looking backwards for the previous sales figure. So we're only calculating it as the year goes through. So we had January, February, March, April. We're not looking at the estimated sales going forward. So it's actually the historical test method. So that answer is going to be false. The second one then, TC Footwear must notify HMRC within 30 days of the month end that the registration threshold was exceeded. So here we can then have a look again at reference material 2. And we can then have a look at here for the compulsory registration. For the historic test, so we're using the historic test, and it's within 30 days of the end of the month threshold was exceeded. So that would make this answer true. The final one then, the VAT registration for TC Footwear Limited will take effect from the date that the VAT registration threshold was exceeded. Again, let's go back to our reference material up here. And actually, it says that the registration is effective from, and when we look at our historic test, it's the first day of the second month after threshold exceeded. So it's not from the date the VAT registration threshold was exceeded, it's the first day of the second month after the threshold was exceeded. So that makes that false.